Thanks for joining us, everyone. Let's go ahead and get started. We're about 1 minute after. I'm Anton Werk. I'm the head of marketing here at Bill360. We have some great content to present today. I'm going to introduce you to our speakers in just a moment. But before I do that, let's just real quickly run through the agenda. All right. After this brief intro, we're going to get to all the good stuff. So we'll start with the impact of AI on accounts payable. We'll then transition to our next section on transforming accounts receivable with AI. If at any point during the presentation you have questions for either of our speakers while they're presenting, please use the questions button at the bottom of the screen. I think it says Q&A. We'll collect any questions that you've got. We'll answer as many as we can at the end. If for some reason we can't get to questions, we will email each individual with answers to their questions if we can't get to it live. Don't forget, please stay on until the end. We'll be selecting one random attendee to win a $100 Amazon gift card. And lastly, I do want to let everyone know that we're recording this webinar. We're going to email it out to everyone when we're done, in case you'd like to rewatch it or share it with a colleague. All right, let's move on and introduce our speakers. First up will be John Gronen. He is the CFO, Chief Financial Officer at Yooz. He's going to be talking about the impact AI is making on accounts payable. And after that, Chris Arnold, Chief Technology Officer at Bill360, will talk about the transformation that's happening in accounts receivable by leveraging AI. And let's jump in and I'll turn it over to John.
All right. Thank you very much. All right. So where are we with AI in the world of AP? I think we've seen over the last couple of years, especially rapid advancement of how AI is being used in accounting. Specifically in AP and AR to automate some of those processes that have been, at least historically, very, very manual. So up until this point, most of those processes were the kind of historic ones that were driven by the ERP themselves. You're starting to see more companies adopting third parties such as Yooz or Bill in order to automate those processes. And so here we are in 2026. Right now, most companies are offering some form of autonomous AP processing. So the ability to ingest an invoice, bring it into the system, have it coded, route it for approval, and then ultimately get it paid. So in AP, we've seen that. It's really moved a lot in the last couple of years. Companies like Yooz have been doing it for about 10 years using their own models, combination of optical character recognition or OCR, machine learning, and AI with kind of self-developed models. And now we're starting to see bringing in agentic AI, such as a ChatGPT or a Claude, into those to create a more user-friendly experience. Where are we going from here? I think we're going to start seeing more around predictive fraud over the course of this year and into next year. We'll see cash flow intelligence, where the system is actually forecasting your cash flow based on how it's ingested invoices in the past and process those. On the fraud side, I think it's getting better. Personally, like our system has made leaps and bounds of understanding which invoices are likely fraud. How do you address that within the system? What are the markers of it? And then in AP in particular, the thing that that AI does for you is actually create time. It takes the processing of an invoice from about 11 to 12 minutes down to about 2 minutes once it's seen that invoice once. So when the system comes in, sees the invoice, codes it, you can hit save. The machine learning takes over from there. And every time it sees that invoice going forward, it automatically codes it. So your accounts payable clerk is only validating that it's still the same cost center, the same account, the same geography. Nothing has changed, and then hitting approve, and then it routes it for the various other approvals and then on to payment. That time savings allows the accounts payable clerk to spend more time doing due diligence on new vendors, looking at invoices, like looking for those signs of fraud. All of that I think is huge right now. Like we'll get into it later on in this presentation, but fraud is expanding in AP rapidly. The use of AI to perpetuate fraud is astronomical. The future uses of it potentially are astronomical. So using good AI to fight the bad AI is going to become more and more important. I think as we move forward, the AI will start looking more into supplier relationships. So, historically, over time, what has your spend been with that supplier? Is it comparable to other companies or um, other products that maybe you're using today? And when you go to negotiate those contracts, can you use that kind of spend intelligence that the system's generating for you with a voice command to negotiate a better deal? I think we're going to see that coming into AP more and more often. At Yooz building a lot of that in right now. The ability to look back at a particular vendor like Salesforce.com, just to pick one and say, what's my spend been over the last 6 months? Is it increasing? If it is, should I negotiate better pricing? I think we're also using it to look at helping out the accounting teams for accruals. So if it's historically been $5,000 a month and this month it's zero or it's $10,000, it suggests that you're missing an invoice and you need to accrue it. Or maybe you've seen an invoice and you accrued it and you're now seeing twice as much expense. And so you need to back one out. So we'll see that, as we move forward. And then I think we'll see finance becoming more and more and more of a strategic center. It already is. My role, yeah, personally as CFO has moved a lot from, producing and analyzing financial statements to really being more of a strategic leader for the business. Focusing more on what's driving revenue growth, how do you kind of control the expenses on the background, but also really drive forward those strategies and what new avenues should we get into? What new verticals should we get into? I think you're seeing finance moving more into that direction, and the supporting element of that is the adoption of AI. Next slide. So how is AI impacting us today? Like I said, it's really transforming accounts payable. It's eliminating those manual errors that you have when you have humans doing that work. Fat fingering, a journal entry code, an account code, any of those, will start to get pulled out of that. You're freeing up time for those employees to spend more time looking at the few that they have to do manually the first time before the machine learning takes over. And so you're really creating an environment where the accuracy of what you're doing goes up exponentially. Your accounts payable clerks have more time to look at things, more times to understand the financial close. It frees them up for more value added work, like looking at vendor spend analysis, looking at trending over time, those kind of things that the agentic AI can help you with. And so you're really creating almost a force multiplier for your finance team. As you're expanding the number of invoices you're processing, you don't necessarily need to add more humans to do that. You're gaining capacity just using AI to automate those manual processes that you have today. And I think back 2 or 3 companies where I had manual processes. I used to receive a stack of invoices that was literally 2 inches high, printed invoices with a check paper clip to it that I had to review and initial the invoice and sign the check. Those days are really going away. It wasted an hour of my life twice a month to do those check runs. And inevitably, I found an error in there somewhere. Someone fat fingered 62 cents instead of 26 cents, and then they had to recut the check and void that one. And all that manual work goes away when you're using AI and you're using automated processes to process those invoices and those payments. Where else can you use AI today? I use it personally a lot to develop a lot of Excel formulas and emails and things like that. So I think those applications will continue to expound, and it's just your usage of AI and how you want to use it personally. Next slide. Okay. So what is Yooz doing? Yooz has created a product called Yooz Protect. What it does is it looks at, invoices coming into the system to determine whether they're fraudulent or not. So if a fraudster has taken a legitimate invoice and changed certain things trying to perpetuate fraud, such as the bank account or the remit to address, those leave behind meta tags on that document. So our system can actually read those meta tags and understand that document is not an original. It has been manipulated. And it sends a warning to the AP clerk that you should pay more attention to this one. We're also using the AI to look back at the vendor database to say, this vendor traditionally was banking with Wells Fargo, and now this invoice has a Bank of America account. And so it's highlighting those things that are likely signs of fraud. So agentic AI and AI in general in the AP world is starting to help us find those things. Okay, next slide. So what's the tough part about AI? The tough part is really the trust and the privacy in using a commercial LLM, a large language model. So once you upload your data to those models, in most cases, if you read the terms and conditions, you no longer own that data. They do. And so there is the ability for them to use your data to train those models to gain that intelligence on what your company's doing and share that with other people or sell that data to another person or another third party. And so I think one of the biggest barriers that I hear from other CFOs that I talk to is really wrapped around data security and data privacy. How do we keep our data private? There's a couple of different ways to do that, and a lot of those LLMs will allow you to kind of segregate your data from the rest of it, but you have to ask for that. You pay extra for that. And so you're not getting the benefits of training your LLM on a broader set of data. It's more trained on your particular data, which is usually fine. But you're also protecting your data from going out into the world. So if you don't want other companies or third parties to understand your revenue and your growth rates and how many employees you have and all those things, you can kind of control that with a walled off LLM. Today's platforms are really not that transparent about it. So my advice to people is always do your diligence, look at the contract carefully. Those things are negotiable. There yet, usually is a little more of a price with it, but you want to think about those things. If you're open to it, to using an LLM and you're using data that's not confidential, then it's probably okay to use them. Otherwise, I would look for how do you protect your data in this environment. Next slide. AI and payments. So we're seeing more and more AI coming into payments, the ability to use AI to drive really smart operating efficiencies, to drive payments, to understand who the vendors are you're paying and how you're paying them, how they want to get paid. It creates a lot of traceability within the system. So when you're going to an audit, the nice thing about an AP automation system is you've ingested that invoice. So you have a copy of the invoice stored in the system. You have all of the approvals within that system. And then you have a record of all the payments. So whereas 5 years ago or so, prior to kind of AI coming into this world for most companies, you really had to go to a file cabinet and find that invoice or an email box, find that invoice, print it out for your auditors, go find the payment in your bank account, print that out. It created a lot of inefficiency. Now you can create a lot of efficiencies during your audit or during internal control reviews, for finding everything in the same place. And so it is amazing where the industry's headed, and I'm anxious to see where it goes over the next 5 years. It really does create a lot of discipline within your finance group, a lot of accountability. And so you know exactly who touched an invoice, who made a payment. All of that traceability is there. You're also limiting kind of your third party exposure if you're using a payments module that's located within your AP system. So most of those are using what is called a for the benefits of model, which means the funds sit in a bank's account, checks or ACHs are cut out of that bank's account, not yours. So every time you send a paper check, we tend to forget your account number and your routing number are printed on the bottom of that. anyone who intercepts that check now has both. They can try to debit money out of your account. They can check wash. They can create fake checks and run them through your account. So when you're using a payments platform that's integrated into your AP platform, you can insulate yourself from a lot of that fraud. Okay, next slide.
Actually,
I think
thank you,
that's
John.
actually it. I'll
That
pass
was
it over to
perfect.
Chris.
Yeah.
Yep, we'll segue over to Chris now.
Yeah, and I'll just stay on this for a minute as well, just talking about how, payments within the AR side of the house, how AI is being used there. Because for Bill360, we, very similar in that, we're a PayFac, and so we're handling the payments and doing the risk and credit scoring for our clients, right, to make it really easy for their customers to pay them. And so, AI and payments, as John was saying, is definitely one of these areas that is being used and is constantly evolving, and a lot of focus and a lot of work is being done there. What we're doing is that we have our own models that we've been building out, and really a lot of that is due to privacy concerns and security concerns, right? And we do have enough data across our clients that we're able to, leverage that and be able to get really good behaviors and understanding of, what's a good payment, what is a bad payment look like, and we call them our clients or suppliers. Our customers are typically B2B, so they're selling to other businesses, and so for those buyers, we're also helping out to looking at that payment history and giving credit scores for those buyers, right? And it's one of these things that is really changing, kind of changing the industry, so that we're helping our customers to, understand how much credit should we give, right? Because we're sending out on the AR side, we're actually sending out the invoices, right, for that collection. So we want to make sure that everything looks good there. So if we go to the next slide, one of the things that we're doing, we're focusing on automation, just like on the AP side, and a lot of prediction and personalization, because we are, as I said, our customers are typically B2B, and so they're producing stuff, right? They're doing printing, they're doing they're building machines. They're building things that they're sending to other companies to sell. And when they do that, they have to they're sending out an invoice, and what that actually means is that you're giving your buyers or giving your customers credit. And so a lot of the work that we've been looking at is really understanding that credit risk in that, and giving them scores so that they understand, how, is this customer, are they ordering the same amount over same period of time? And are they still paying, those invoices correctly? Or are they ordering the same or ordering more, but paying less, right? It could be something that's happening. Are they, last month or 6 months ago, they were paying within 5 days, but over the last 5 or 6 months, it went from 5 to 10 to 15 to 20, 30 days now that they're late in paying. So, a lot of what we're leveraging and what AI is really good at is finding those patterns and behaviors that, require a lot of information to aggregate, where you can't just get it on a dashboard, and, really kind of focusing on bringing those insights to light. So if we go to the next slide, one of the things that is happening in the payment space and just in general is there's a new program that Visa put out, and it's called CDP. And so, I'm sure John's seeing it on their side as well, right? Where people are paying by credit cards, right? Businesses like the points, right? You really like collecting and getting those points. And this is, I call this an area where we have AI going up against AI. And so what's happening in April is that, if we go to the next slide, Visa's introduced this new program called CEDP. And what that is doing is that Visa is now using AI to inspect the invoices to understand, so that they can do kind of credit scoring as well, right? They're trying to understand what's the behavior and the relationship between the supplier and the buyer. And what they've done now is that there's either a penalty or a discount, right? If you're providing a lot of this, providing the information that they're looking for. And one of the things that we're doing is really trying to help our clients understand whether or not they're going to be compliant with this new behavior, because this is something that was introduced about a year ago, but it is just starting to happen now. And not a lot of companies have seen the impact yet. They haven't gotten their first bill yet and see how much the interchange rates that have happened. But this is an area that we think is going to be very helpful for our clients, because these interchange fees they don't go to us. They wouldn't go to John either. They go to Visa, right? So it's we're trying to help our clients to really help control the costs of receiving funds, right? And so we've introduced this new system to help identify whether or not the line items are matching up, whether or not their zip codes are all correct. And there's changes to see if there are discounts. There's a lot of different things that are in there. And it's an example of how AI is a really good solution when you're trying to look at 10, 15 different points of data on an invoice to say whether or not you're compliant or you're not compliant. We can go to the next slide. So the in for Bill360, we've given our AI a name. We call it Ari, right? Trying to make it kind of simple and give it a little personality, right? And make it the agent. We haven't been doing it nearly as long as Yooz has, so we're a little bit, we're very targeting, what we're releasing and how we're helping our clients. And so, as I mentioned, we're focused a lot on how to make sure that their invoices are compliant with these new visa requirements. But the other big thing that we're looking at is making sure that we are giving them those insights really around the credit scoring, so that they understand how are their customers behaving and how are their customers paying, because that's their risk, right? If you're a manufacturer and you're sending things out on through invoices, then you're at risk for those payments. And so we see a lot of value on the accounts receivable side to help them to manage that risk. And then as we go, as we help them with that, there is a lot of work in terms of building out agents to really automate a lot of the things that they're doing today. So sending out those invoices, sending them out via email, sending them out to AP systems such as Yooz, all of those things are pieces that on the AR side, that's what we're focused on. And then down the road, people like the interactive versions of these, where I want to be able to ask a question and get that answer immediately. And so we're looking at that as we bring these new features, and as people adopt and understand what they're capable of doing, as we build trust with the answers, and trust in terms of the controls that we have in place, and they can see that traceability and the information is transparent. We'll continue developing these things. But I think, as John said, it's very exciting, the change in the market, and the pace of adoption for AI is just, it's amazing, right? I mean, I'm sure people have seen the articles, and where ChatGPT is, 100 million people within 100 million downloads, I think, in 3 months, right? One of the fastest adopted technologies ever. So it's here, and we're looking to help on both, the AR side of the house and the AP side of the house. And I think that's my last slide, right?
Yep. Thank you both, John and Chris.
Really,
All
thank
right.
you.
We do have a couple questions that came in. Um, some of these seem to be specific to you, John, some to Chris, but the first one actually could probably go for either of you. First question that came in, I'm just going to read them in order. Do these programs integrate with software like QuickBooks?
Yeah. Chris, you want to take that one first, and then I'll go?
Sure. The simple answer is yes on
Yeah.
my side. It's a full sync back and forth between our system and QuickBooks, both online and desktop.
Yeah, and I would echo the same thing. With Yooz, it's a full sync, API driven, back and forth. So absolutely. We integrate with, I think, 240 now ERP systems or flavors of ERP systems.
Great. Next question is, would our proprietary, excuse me, financial data be used to train the global AI models, or is it just isolated to your platforms?
Well, I'll maybe start, and then Chris, if you want to jump in too.
Mhm.
Yes, the short answer is yes. If you don't wall off your data within Claude or ChatGPT or whatever, it's generally used to train the broader models, the global models, and so you do lose some control over that data.
Yes, on our side, everything is within our tenant, right? So we're making sure that that data is not being used for any training activities. And I would even add, you know, outside of looking at these things, if you are looking at just AI in general, right, making sure, John, I think you mentioned this, right, looking at your contracts in terms of if you have a contract with ChatGPT, get those higher ones, the enterprise versions, because that allows you control over your own data. You can even delete data and things. Same here, right? I'm John, sure you got the same type of controls, but
Yeah.
we have to comply with GDPR and all of the California laws, right? And so it's there's a lot of controls that we have in place so that when people, if we're requested to remove data, we can remove that data, and we have those controls and manage the information that we have.
Yeah, and I was speaking generally. I guess within Use itself, yes, we wall off our customers' data. We don't allow the LLMs to use that to train their models. So we use the enterprise version, like Chris said, and completely segregate our customers' data from any of the publicly available data.
Great. Thank you both. A couple more questions here. Instead of just looking at what is owed, can the AI identify patterns like a specific industry slowing down to warn of a cash flow problem before it happens? Chris, I'm guessing that one would probably be for you.
Um, We're not doing that today, but yes, I mean, that's one of those things that is pretty exciting in terms of how you look at, what you're capable of doing, right? And as that's where we're looking at, all right, for our particular clients, we know the industry that they're in, how are things shaping up so that we can kind of give them guidance. And that, kind of goes in with as we're looking at building out credit scores, right? We're going to look at um, our customers and our customers' customers, but then as well as bigger industry trends. So it's something down the road, that I think is a be a value, so that we can help on that.
Good. Thank you. Let's see. How long does it take to implement an AI-powered AP platform? John.
Um, Okay, I'll take that one. It depends on the complexity, the workflows that you want. It can be as short as, 30 to 45 days or as long as, 6 months. It really depends on the complexity of what you're looking for. The nice thing about Use is there's a core system that's highly configurable. And so you can almost create your own bespoke system based on the way you want it to work. So I know it's kind of a general answer, but it basically depends on how you'd like to use it.
Okay. Chris, do you want to take that same question from an AR perspective?
Yeah, on the AR side, so our focus is on the SMB market and looking at it, anywhere between a 2 to $100 million, and so there's a lot of focus around the kind of the automation pieces of that going out, and so we have similar we have onboarding best practices and understanding what is your workflow as an industry, right? Because we work and hook into the systems that are creating those invoices, right? So each one of our clients is going to be a little bit unique in terms of how we do that, and we work with multiple software partners as well that are the originators of the invoices. Um, so depending on it, I mean, it could be, you could be talking about, hours, if they're doing a very, very simple workflow to send out the invoices, or, it could take, if there's very large number of customers that they're sending out, or they're sending out, you know, 30,000 invoices a month, it's going to be a little bit longer of an onboarding process, because you want to go through that incrementally.
Thank you. One last question, and I think this probably would could be answered by either of you or both of you. What is the typical ROI timeline for implementing a solution like either Use or Bill360?
Chris, you want to go first or you want me to?
I'll let you go first on that one.
Okay. Yeah, I think it again kind of depends. For AP, it's pretty straightforward. If you're using the full system and you're using the payments module, the payback is very, very fast. Because you're taking that processing of about 11 minutes or 12 minutes down to about 2 minutes. There's a massive savings just in terms of the need to add more people as you're scaling the business or doing acquisitions. Um, and then on the payment side, the average check cost, if you Google it, is somewhere between $4 and $22. I would tell you from being in the payments business for 12 years now, the customers I've seen really do the math. It's somewhere between 6 and 9 or so. So even if you're the most efficient, most payment platforms are charging about $2 a check. Somewhere between 75 and 85 cents in ACH. And so there's a massive savings there for you versus what it costs you to do payments internally. And then you add in the ability to use a virtual card to make those payments, which generates what's called interchange, which is the fee the merchant pays to accept that card. We get a share of that and we rebate back a share of that. So we have customers that literally pay us nothing for use. Their card acceptance is high enough to cover the cost of their checks, their ACHs, and the use SaaS software itself. So at the end of the year, they get a check from us as rather than writing us a check. So in those cases, the ROI is incredibly short. But for most people, I would say the ROI is almost immediate. It's about a 3 to 6 month payback. If you look at all of those associated costs together, the labor savings, the savings on payments, and the potential rebate related to the virtual card for payments of those invoices.
Yeah, and what I will say, the ROI, the big measurement that we end up having on it is, on average, our customers are reducing their DSO, day sales outstanding, by at least 10 days, right? So some of them on average, right? So that your ROI, all of a sudden you got that cash flow coming in 10 days faster, right? And so it pays very, very quickly, like John said. I mean, we've seen, reductions of DSOs from, by 40, 50, 60%, in a very short amount of time. Within, I would say that customers are fully utilizing the product within, 3 to 6 months, right? Because you get these cycles of sending out monthly invoices. And so they'll get that return on investment within that time frame very quickly.
Thank you again to everyone who joined. Thanks, Chris. Thanks, John. That concludes today's webinar. As a reminder, this was recorded and will be emailed out to everyone.